China is suddenly paying way more for silver than the rest of the world, and smart investors are starting to pay attention right now. Silver prices in Shanghai are trading nearly 8% higher than prices in London and New York. That means buyers in China are paying several dollars extra for the exact same ounce of silver. And here's the important part. This kind of gap almost never happens unless something serious is going on behind the scenes. Last time this happened, silver exploded higher within months. So the big question is history repeating itself again? In this video, we'll break down what the Shanghai silver premium actually means. China is aggressively buying silver, how supply shortages are building historical examples from 2010 and 2020, and the key signals investors should watch next, because this may be one of the biggest warning signs the market is ignoring right now. What is the Shanghai silver premium? Let's keep this simple. The Shanghai silver premium is the difference between silver prices in China and silver prices in Western markets like London or New York. For example, if silver trades at $81 globally, but Chinese buyers are paying $87, that extra amount is called the premium. Normally, these price differences stay very small because traders quickly move silver between markets and profit from the gap. Up when the premium becomes unusually large and stays elevated, it tells us one thing: China desperately wants physical silver, and right now, that demand is becoming extreme. Why is China paying more for silver? There are several reasons behind this. One, industrial demand is exploding. China is the world's largest producer of solar panels, electric vehicles, electrics, 5G infrastructure, and all of those industries wreck our silver. Silver is used in conductive material, circuit boards, batteries, technology. As these industries grow, silver demand grows with them. 2. Supply is not growing fast enough. Here's the problem. Silver production inside China has stayed mostly flat for years. Mining restrictions, environmental regulations, and slow project approvals have limited new supply. So demand keeps rising while production struggles to keep up. That creates pressure on physical silver inventories. 3. Chinese investors are also buying. This is where things get even more interesting. Chinese households traditionally trust physical metals during uncertain economic periods. When real estate weakens, stock markets struggle, or savings lose value, many people move into gold and silver. And silver is much cheaper than gold, making it more accessible for average investors. So now industrial buyers and retail investors are competing for the same silver supply. That's one reason premiums are surging. Has this happened before? Yes, and the results were massive. Example 1:10 silver rally back in 2010. Shanghai silver premiums suddenly surged above 7%. At first, most Western analysts ignored it, but months later, silver skyrocketed from around $18 to nearly $50. That became one of the biggest silver rallies in modern history. Example 2020 pandemic shots. Same thing happened again during the global pandemic. Physical silver shortages appeared everywhere. Chinese buyers started paying huge premiums again. Shortly after that, silver rallied from around $12 to nearly $30. So historically, rising Chinese premiums have often appeared before major silver moves. That's why many analysts are watching this closely. Today, what makes this situation different? This time, there are even more powerful forces involved. China recently eased several restrictions on silver imports. That means Chinese buyers can now access global silver markets more aggressively. At the same time, industrial demand is growing, inventories are falling, and global supply remains tight. That combination could create a serious supply imbalance. And if physical shortages continue, global silver prices may eventually move much higher. Key signals to watch. So what should investors monitor? Now, 1. Shanghai premium. If the premium stays above 7% for several weeks, that could signal ongoing supply stress. 2. Silver inventory. Filling inventories inside Chinese vaults would confirm strong physical demand. 3. Solar and production. If China continues expanding solar and electric vehicle production, silver demand could keep accelerating. 4. Silver imports. Rising imports into China may show the country is pulling more metal from global markets. Annalisa, what does all this mean? Here's the reality. This doesn't automatically guarantee silver prices will explode tomorrow. Markets can stay unpredictable, but historically, extreme Shanghai silver premiums have often appeared before major rallies, and right now, demand is rising, supply is tight, inventories are shrinking, and China appears willing to pay almost any price for physical metal. That's why many investors believe the silver market may be entering another important phase. The key is not hype. The key is following the data. So what do you think? Is China warning the world about a coming silver shortage? Or is this just temporary market panic? Let me know in the comments. And if you enjoyed this breakdown, make sure to subscribe and turn on notifications for more deep dive financial analysis, because sometimes the biggest market moves begin long before mainstream media notices them. Thanks for watching. See you in the next video.